hello, everybody. We have a wonderful, wonderful panel sort of set up right now. And so my name is Marvin Liao. I'm going to be the moderator for this great, great panel. It's Investing in Asian Fintech. And we have three amazing, amazing investors over here representing their various regions and companies. So I'll make a quick introduction of myself, and then I'll turn it over to each of you. I'll call you out. So my name is Marvin. I was previously a partner at 500 Startups for about 6 years, invested in the pre-seed and seed stage, invested all over the globe, and now just honestly goofing around in 2020 and helping out some friends here at the Quarantine Summit. And I'll turn over, Melissa, ladies first. Please give a quick intro of yourself, what region you're focusing on and your firm and what stage you invest in.
So Arbor Ventures is a fintech fund. We're based in Singapore. 1/3 of the portfolio is actually in Israel and the GCC. 1/3 of the portfolio is in Asia, spread across Asia, and 1/3 of the portfolio is in the US. But our strategic base is Asia, and the headquarters for the firm is Singapore.
And stage that you're investing in?
So 80% is seed and Series A, and 20% is late stage.
Okay, and what portion of the portfolio is actually in the fintech space? 100%. Oh, 100. Okay, full on 100%.
We only do financial services. That's all we do.
And that's why you're here on the panel.
We do one thing, we do it well, fintech.
All right. Dennis, how about yourself? Please give the audience a sort of tell them a little bit about yourself.
Sure. Thanks for having me here. So I'm the partner for the Credit Ease Fintech Fund. We're trying to focus Fintech fund, but with exposure globally. We focus on early growth stage fintech company only. So for Fund 1, we have invested close to $300 million so far, close to 60 companies. Actually quite interesting, 50% of them inside China and 50% of them actually outside China. So in China, we take lead, we focus on the leading deals, but overseas, we work with other partners to co-invest in leading fintech companies. So we're not a corporate venture VC. We're actually a direct investment fund with outside LPs. And, we focus on all the key fintech verticals. I guess that's it.
Okay, perfect. And just to clarify too, you said early growth stage. So is that Series B, Series C, just to give folks an idea?
Yeah, I think more from B to C stage. Sometimes we actually can go pretty late, but usually we're, not really competing for the A because there are already so much established player out there. Yeah.
Okay. All right. Perfect. Yin Lang.
Yeah. Hi. This is Yin Lan. I'm a founder and CEO of Insignia Ventures Partners. We are Southeast Asia focused technology venture fund. I would say fintech is roughly about 25 to 30% of our portfolio. We invest in TMT across the board, so logistics and other sectors as well. But fintech is a pretty big portfolio. We invest primarily in I would say pre-AA, the occasional B. So it checks anywhere ranging from 2 million to 10 million. And I would say that I think the interesting things that we have constructed for us is that we have about 55 unicorn founders. They are also investors in our fund, and actually quite a number of fintech unicorns. They are investors, and they tend to be good resources for us to help our companies with. So we only invest in Southeast Asia, and I would say that we also have an opportunity fund that does some late stage, but that's for on an occasional basis.
Southeast Asia is a fairly broad sort of like area, right? Is there some specific markets in Southeast Asia that you're focusing on?
Yeah, so I think our geographic distribution, I would say 50-60% is Indonesia, and then about 30% is regional, and then like the 10% of it will be Philippines and Vietnam. So the king of Indonesia, queen is like Vietnam, and then Jack is like Philippines.
Okay. All right.
Yeah.
As I assume that my understanding is that this is mainly a U.S. audience. And so, Asia is very wide area, very, very large area. Would love to maybe, sort of have you talk a little bit about what makes sort of like your specific sort of fintech in Asia, fintech in China, fintech in Southeast Asia, whether it's Indonesia or Singapore, China, etc. What makes it different? And I'd love, sort of give some sort of perspective or insight, because it's like I said, it's a very broad and very big place, right? So love to hear your thoughts. Anybody? Lang, Dennis, Melissa, who wants to jump in?
Well, I mean, I'll jump in. You're right. It's a really big place.
Yeah.
I mean, people, I think, sometimes forget that, to fly from Singapore to Tokyo is 7 hours. It's a big place. It's clearly longer than flying from San Francisco to Boston. I think Asia's been the leader in fintech. And I can say that, if you look at payments, clearly China has been the leader, and I'm sure Dennis can address that, right? If you look at neobanks, China's been the leader. I mean, we talk about neobanks around the world having 34 million customers. Well, WeBank alone has 200 million. And they also, if you look at the average account balances, they're far higher than any other neobank in the world. And then, when you think about even some of the trading platforms, and then when you think about how Asia's developed, that any people who can aggregate flows have been just deliverers of financial services. This is very, very different than what's happened in the U.S. or Europe, and Asia's clearly been the leader in a lot of business model innovation. You're exactly right. Southeast Asia is not one place, right? It's made up of countries with very different demographics and different needs and different languages and different cultures. The same is true of China versus Japan. And so it's an extremely big region, but where innovation in financial services has absolutely led the world. And thanks to the governments and their support.
And do you, when you say thanks to government support, you mean really more from like a regulatory sort of like framework? Like, Singapore has been very, very sort of like forward thinking in this area, right? Hong Kong as well too, China as well too in these areas. Is that what you mean? Or just I'm curious about your, sort of what you mean by that.
Well, the regulation is different, in say Japan has done a great job. I mean, they have been on the, the leading edge of innovation around cryptocurrency as an example. But just overall, even in payments, they've been very forward thinking. And obviously in China, right, they've had a pattern of how innovations happen. And Hong Kong, with the neobanks, and then you take Singapore and MAS and all the effort they've made. And so it's different. It's not universal how they've approached it. But the point being is they've not only encouraged innovation in financial services, they've enabled it, and they've enabled private companies to innovate on, within sort of, let's say, boundaries or on the platforms. But it clearly has.
Dennis, I'd love your take with the
just
China
to add
global
on
take.
to what Melissa said. I think in particular in China, it's really the consumer-driven fintech innovation is really blossoming. I think because the mobile, coverage penetration rate is huge, and also thanks for the Ant and WeChat payment, the online financial transaction has become wide accepted in China, and also because the traditional financial institution service are not really well covering the consumer sector. So the huge market opportunities in China, you see the wave of online payment, the wave of online lending, and now you see the wave of online insurance or digitized wealth management platform. So I think there's a huge market in particularly in consumer-driven business model. But it's also interesting when we look at overseas market, for US example, I think the enterprise-driven fintech, it seems that to be more successful because you do have a lot of these existing financial institutions, but their lack of these technology innovations. And also in the US, it's just that the enterprise business model is more proven. In China, people tend to develop things by their own, and then they don't want to use other people's solutions. So if anything that we see the difference between the two sides, maybe in the US more enterprise driven, in China more consumer driven. But I think it's also interesting to say that in China, the internet companies are very dominant and they are very aggressive into all the financial service area. But you don't really see that in the US, like Amazon, Facebook are not really into this. So that also changed the landscape a bit. So, when you just as Melissa mentioned, the new bank is actually WeBank. It's like part of the WeChat. But in the US, Facebook won't do that. Amazon hasn't do that yet. But we don't know what's actually going to happen. So I think in China, for the successful consumer-driven fintech companies, you do have to offer some financial service by yourself. It's quite interesting. In the US, you probably have consumer-facing platform, and then you work with traditional financial institutions, you can do that. But in China, you probably need a middle layer. You connect with the internet company and the financial institution company, be something in the middle. That's something interesting, I would say, a bit of different. But I think enterprise is also coming up in China. I think just this COVID situation is probably accelerating the enterprise adoption of technology solutions. So I think there will be a wave of new fintech companies providing fintech solutions to the traditional financial institutions. So in that sense, I would say some of the US model or US companies could have potential value if expanding into Asia or China.
So the recap, basically, one of the reasons that the Chinese sort of consumer market is just so far ahead on the fintech side is because the financial services and things, when the passive there's been a leapfrog, basically, is what you're saying, plus the push by a lot of the big players. But it is interesting because, as you mentioned, where a lot of the attendees and audience are fintech founders here in the US, as you say, mainly on the B2B sort of like enterprise side, there could be an opportunity, and that's actually helpful and interesting to know. Yinglan, you would love your take on sort of the Southeast Asian market and what you're seeing.
Yeah, I think the big takeaway for Southeast Asia is actually compared to the Chinese and US folks which are very well banked, the big takeaway is actually the proportion of unbanked is quite high. Indonesia is roughly, based on estimates, 50%. I think Vietnam is as high as 70%. Philippines is probably 60-70% as well. And I think there's a big leapfrog that we're seeing that happens, right? I mean, the US really went through a cash checking account, then online payment, and then mobile. Japan, you went through sort of cash and then online account and mobile, and then China went straight from cash to mobile. And I think Southeast Asia is actually going through a very interesting transition where we are seeing cash, but going through into a hybrid of models like the M-Pesas, the Pay Fast type, where it's an agent-led model that these agents have bank accounts, but it's connecting to a lot of the unbanked folks in the rural regions, because I think the banks are not they don't have the branches in the rural village, so as a result they can't it's very difficult for people staying in the rural area to access banking services. And so we are seeing a blossoming of some of these companies that tries to tackle and providing financial services to insurance, peer-to-peer payments, top up, all these banking services to people who are unbanked in the rural village. So I think that's the key takeaway number one. I think number two is that Southeast Asia is so it's not homogeneous, unlike the US and China, right? You can't really paint it in one stroke. Indonesia is very different from Vietnam. It's very different from Philippines, and each country has very fragmented payment systems, brokerage systems, like even license requirements. So actually, it is unlike China, where it's sort of a duopoly, WeChat, Alipay. But in one country alone, like Indonesia, there could be 15 mobile wallets, and then in Vietnam there's also like at least 5 to 10, Philippines as well. So it's still early days. If you look at it, still I think the first half of the movie, in terms of what will happen, and I do think this whole COVID situation will result in some consolidation among all the wallets and actually the payments. And I don't think we have even evolved to the second scene, which is the wealth management, the insurance, the stock brokerages yet. And I think we're starting to see the first wave
wealth management, just to make sure, right?
Yeah, wealth management, that's right. I think we're starting to see the first wave of like neobanks popping up. I think Singapore has put up a bid, which we are putting in a bid for. Philippines, we're starting to see something. Malaysia, starting to see something there. Indonesia and I think Vietnam are sort of behind, but also catching up. So I think we're seeing the early innings of some of these neobank happening. So we are sort of learning from what's happening from China and US to see what may be a mutant entity that comes out. I think the third sort of a key takeaway is that I think the surprisingly, if you think about what has happened in China, the neobanks of China is WeBank. I think the what we're seeing is the ride-hailing players in Southeast Asia like Grab and Gojek. They're all branching into financial services. Not only just because it's a high frequency sort of activity and food delivery as well. So they embedded payments, and all of them are going to a fintech. So payments, lending, insurance for the drivers, and I think that's starting to play out. Along with I think a lot of the providers of that services, in terms of credit assessment, and so a lot of ecosystem players are popping around this to support this tech-enabled big players.
So basically, I mean, I think to sort of recap what all of you're saying is that you're seeing this rise of sort of like the super apps, right? Like the super apps, which is like you do everything with sort of like the sort of like underlying infrastructure of like payments, right? Like, so you can basically use this to pay for everything, which is a huge opportunity, right? Think about the volume. I think for the US audience, just to give them some context, is population of Indonesia is what, 200 million? Is that right? 200 million? 250. Population of Philippines is
roughly, yeah.
Almost 200, right? China is 1.2 billion?
1.3.
1.1? 1.3 billion. These are massive markets, right? Like huge markets.
Yeah.
Vietnam is, I think, what, 100?
Yeah, over there, 90 to 100, yeah. 90.
Yeah, 90 to 100 million. Yeah, big, massive markets and opportunities. Since we have to cover this subject of COVID-19. Has this, in our previous conversation, has this affected sort of like how you've been investing? Has this affected your portfolio companies at all? Curious. And how are you? What advice are you giving your founders, and what are you telling them? Anybody? Dennis?
Should I start?
Melissa?
Because China started first.
Yeah.
So, first from the business perspective, we actually have basically talked to every individual company, entrepreneurs in China throughout the period, collecting information from them and how they see how things are happening. It's kind of interesting because the whole thing actually coincided with the Chinese New Year. So a lot of the actually seasonal slowdown were actually not huge different from the previous plan or budget, but it's more tilted to the online business model. So if you look at the business who have more online channels, they probably down 30-40% from their budget in January. Of course, February is lower, but March things are all recovering, and a lot of these business are looking for normalization, maybe in May a period of time. So that's quite encouraging. But of course, business model with the offline hit pretty hard. February probably 10 or 20% of the budget. But still, from what we see, the management and the companies are pretty confident, especially with the situation opening up. If you look back, I asked them, what do you think you have done right through this period of time? A couple of things kind of catch my eyes. One is that stay active in communicating, with your customers, with your suppliers, and with your employees. Take care of your team, and also sometimes to say that show a little bit of leadership. Show your true color. So rally the team, and so people are not getting panic. That's very important. And also some other feedback is that, because this period of time, you're going to get isolated. You're probably not going to buck down by a lot of, daily routines. Think a little bit about longer term strategies, given that this thing going to come through. Think about, what's going to happen after this comes through, and, how, especially under this tough situation, you actually get tested your business model. You actually think about your value proposition and your strategy a bit more. And also some other suggestion is that, training your employees, don't waste this time, and, and then of course, move your business operation more online, using more technology. A lot of them sign up to this, Ding or WeChat business, all these things. Actually quite helpful. People go through this, they actually kind of refresh a bit. They have to think harder a little bit. If they do well, the team and the company morale actually get a little bit boost.
Yep. So it's an opportunity.
Yeah.
Take it as an opportunity. Yinglan, what are you telling has this affected, things in Singapore for you or Southeast Asia? How has this affected the business, and what are you telling your founders?
Yeah, I think there's a few things we tell our founders, right? I think one is that this is unprecedented times. So I think it's a very unusual time in the market. I think for our portfolio, mostly it's Indonesia. So I think what we tell them is that, hey, I think the first thing you should think about is to make sure you have at least 12 months of runway, because I think fundraising run is going to get longer to close, and then make sure you have enough reserves, even if always expect the worst case situation of, let's say 90% of the revenue drops. I'm very comforted by what Danny is saying, that, okay, there's at least you see some recovery in normalization in May. So that's very comforting. But I think what we tell our company, brace for the worst, 90% or 100% of our revenue gets wiped out, and then plan from there. And I think we're quite fortunate. I think we did a tally. I think it's about 75% of our companies have 12 to 18 months of runway, so pretty healthy. And then for the remaining, I think about 10% each have about 6 to 12 months of runway. So those, and then another like 10% has less than 6 months. So for these groups, we actually went down to scenario planning with these guys. What do we need to do to get there? What are the costs we need to slash? I think the one thing that's quite good about Singapore government is that they have actually embarked on a fairly generous sort of exercise to help businesses, similar to what is happening in the US. So that's been very fortunate. I think one of our companies got like 60 grand of aid and support, which was actually quite good.
Yeah, that's helpful.
So we try to tap out on those, and then I think secondly is to try to tap out on the easily reversible things like marketing costs, and see whether we can get rental reductions and all that. And then I think the sort of harder things to do is to, hey, can we make adjustments to pay? Those creative things include reduction of pay, but putting back ESOP. So that's that. But I think the funny thing is that about 20% of our companies actually have benefited from this. So including cross-border logistics, online education, online media, some of these gaming companies. Actually, one of our fintech companies doing bank-to-bank transfer has, for some reason, a lot of bank transfer is happening. So their transaction volume, doubled. So I think we're also seeing some beneficiary in our portfolio, in this situation.
How about you, Melissa? Any sort of like quick words of advice for any founders and what you're seeing and sort of just thoughts?
Yeah, I mean, we went through the downturn of 2001 in venture, so I think the playbook is, make sure that you've got. For us, it's 18 to 24 months of cash is what we're telling people. The portfolio companies, we're working with them on the budgets. I think I would say the portfolio in Asia, the CEOs are remarkably quick at cutting expenses and really buckling down and realizing it could get challenging. I think the one key thing is to make sure you really work closely with the portfolio companies to think about a post-COVID world, right? There are certain business models that just may not be that relevant, and this is a great opportunity to sit back, think about what is going to be relevant when the world does turn back on. But I would say, from a portfolio perspective, we haven't seen the impact, like Dennis said, right, in Asia as much maybe as in other parts of the world. And I think that was because when it did hit, it was during the time of Chinese New Year and a normally slower period. And yet they were able to go ahead and cut expenses and really react to the situation. So I think from our perspective, we see the Asia portfolio in really good shape. And the CEOs reacted really well. And I think the question will be, I think it's an immense opportunity. And in some ways, the situation's been liberating for a lot of CEOs where you could stop and think and get off the treadmill and think about products for the future and what the world's going to look like. But this is going to accelerate digitization. This is going to accelerate online commerce for both not only consumers, but businesses. This is going to accelerate, the need for more and more anti-fraud tools because we're seeing, phishing and fraud definitely escalating during this period of time with all the e-commerce.
Yep.
So it's actually a period to sit back and think about what opportunities are ahead of us.
Yeah.
And I think there's just no shortage.
Yeah. These are great thoughts, right? Of just like this crisis will end and there's going to be amazing opportunities, to sort of end this on a positive note. Like, are there any specific areas, whether you want to highlight portfolio companies or highlight sectors that you're like, I'm super excited about, like this sector coming out, sort of at least was super well positioned for the future? We'll love each of your thoughts, particularly for the region. Anybody? Yinlang, Dennis, Melissa, anybody? Yinlang.
Well, I'll give you an example, right? We're thinking pretty hard about enterprise sales. It's going to change. Yep. I think it's a question when borders are going to open up, and the fact you have all these airlines that are grounded. They got to get pilots retrained in simulators before they start flying. Yet enterprise sales need to continue. So how do you do enterprise sales when in a much different way? Yep. Than in the past? And I think interfaces and integration is going to have to be a lot simpler, more like it has been so maybe it's consumerization of B2B enterprise sales, but that's one area we're thinking very hard about of what that looks like going forward in the future.
I think from our perspective, I think some of the themes is a continuation, but probably get a little bit of acceleration. We are focusing on the digitization of the whole insurance process, either be it distribution or product or risk management. That's a key area that we're focusing on. And of course, the wealth management side. Before, a lot of offline financial advisor is needed, but through this process, actually you see people more, try to find the financial products online and then attending the online financial advisory seminars, and people are making more investment online for wealth management. So that's another area we're looking at. And also the other thing is that I agree with Melissa that enterprise solution, I think will get certain acceleration in adoption in China, because all the management are looking at how to better run their business, with the employees remote using the technologies. So we'll probably see acceleration of that. So we're also, making a lot of focus on enterprise solution for both traditional financial institution as well as just enterprise.
I know this is a fintech panel, but I think the biggest opportunities actually we see is online education. I think I have 3 kids all at home now learning, and actually a lot of things can be done online. And I think healthcare, with digitization of healthcare, but actually on the fintech note, seeing a lot of those ecosystem plays around it, like sort of lending and insure tech for healthcare like this. I think this is one area we are looking deeply in.
And so I think we're at time right now, so I'm going to make sort of some closing thoughts in general. And this has actually been very helpful for me personally, because it seems like there is actually like light at the end of the tunnel. Asia is coming back. It's dealt with sort of like COVID very well, and the companies are very resilient and huge market, right? Feels like it's sort of the beginning of sort of the growth curve. Opportunities all over, particularly in enterprise, and also just the region is just coming back. So thank you very much, all of you, Dennis, Melissa, Yinlang. Thank you for joining and for sharing your thoughts and insights. I've had a great time, learned a lot, and good luck to everybody on the, sort of in the rest of the conference, and hope you enjoyed this. And thank you very much, all.
Thank you.
All right. Take care and be safe.
Take care.
Yep. Bye.
Bye.
Thanks again.